Hey, welcome. My name is Josefa Huber. I'd like to tell you about if you can get money back from the US government. So, to start with, all of the tax credits and refunds I'm going to talk about today are all part of filing a regular Form 1040 US tax return. There are separate forms. There's separate forms for everything when it comes to US taxes, but it's all part of your main tax return. So, when you call your accountant or any accountant and you find out about getting these refunds, you're really just asking, how much will you charge to file my tax return? A lot of people ask me, how much do you charge to do the child tax credit or things like that? It's all the same thing. It's all part of filing a tax return. And Social Security is the same way. If you have to pay into Social Security, it's all together for US purposes, for US taxes. If you have income from anywhere in the world and you're a US citizen or resident, you have to file a tax return regardless of if you owe taxes or regardless of if you're eligible for any of the refunds I'm about to talk about today. So if you are a US citizen or a resident and you're not filing taxes, please find a professional in your country of residence, preferably, who you can speak with about getting caught up. In addition, all of the refunds I'm going to talk about today, there is a 3-year statute of limitations to claim any refunds. So if you've missed out on claiming because you didn't know you were eligible, or you were using your family accountant in the States and he told you weren't eligible, you can fix your tax returns going back to 2016. You have a very short period of time to still fix 2016. So it is very time sensitive, but you can fix going back. Okay. So the first thing, there's two basic categories of why people get refunds. Number one, you pay too much taxes to the US. You paid too much taxes to another entity. For example, you paid lots and lots of Israeli tax. The US isn't going to give you a refund for that. It's kind of like going into one store with, something that's broken and from a different store and thinking you're going to get a refund. So you had to pay taxes to the US government, to the IRS. And if you did, you may be eligible to get it back if you paid too much. That generally happens for two reasons. Number one, you were an employee of a US company. So you are an employee of a US company, you get a W-2 wage statement, and your employer was required to withhold certain taxes. You fill out a form telling them about how much tax they should be withholding. And then if they withheld too much tax, then you may be able to get that back. So that's the most common reason that you paid too much and you want money back. Okay. Number two is you made payments. You made estimated payments, for example, estimated quarterly payments. Usually you're making estimated quarterly payments because you're self-employed and you think you're going to owe taxes. When that happens, usually, even if you've overestimated and paid too much, there's a really good chance that you're going to owe taxes the following year. So you might not actually want to get the money back. Yes, you had an overpayment, but a lot of these refunds, you may want to apply to the next year. I'm a little new to this Facebook Live and I'm not seeing any comments. If anyone maybe wants to hit thumbs up, smile, let me know you're here, let me know my headphones are working or not. I'd love to see something, anything. Okay. Well, somebody call my cell phone if you know me and it's not working. Otherwise, I'm going to keep talking. Okay, so number one category, you paid too much to the US IRS. You file your taxes, or your accountant files your taxes to calculate your actual tax. And then whatever was too much, whatever taxes you don't owe, you get money back. If you are employed by a US company, you get a W-2, but you live completely abroad. For example, you live in Tel Aviv all year round, you work for a company that's based in Florida. They might be withholding taxes because they don't realize that you live in Israel, but you shouldn't actually be paying self-employment taxes to the US. Oopsies. Okay, there goes my light. And my notes. So Next, we're going to talk about the 3 refundable credits. There's only 3 credits that you can actually get as a refund today that I know about, that I'm remembering right now. There's lots of other credits, lots of other savings credits and education credits and all kinds of other things. But right now, I only want to talk about the 3 that you can actually get a refund for. So number 1 is the earned income credit. You can only get that if you were in the States. Not going to talk much about it. I'm mostly talking tonight about for people who are not in the States. If you're in the States and you have relatively a low income, you may be eligible. You must live in the States. If you're not, do not try to claim it, please. I don't care if you have a US mailing address. We're talking about actual residency, actually where you live. Okay? So if you're my client, you had to have lived in the US for at least 6 months during the year. So it is possible if you move abroad mid-year, you may still be eligible. But it's not something I deal with a whole lot. The next one is the American Opportunity Credit. This is a credit for undergraduate students. You or your dependent must be in your first 4 years of an undergraduate, a qualifying undergraduate institution towards a degree. And they must be, or you must be at least taking at least a half-time course load, like half of whatever they consider to be full course. The full credit is worth up to $2,500. A refundable portion is up to $1,000. So you can potentially get, $1,000 back. The first thing you want to do is ask your school for a Form 1098-T. I'm going to name a few schools that theoretically in Israel should be eligible. If you go to any of these schools, or if your dependent goes to any of these schools and you're paying tuition, please ask the school about it. Hebrew University, Tel Aviv University, Bar-Ilan University, Technion, University of Haifa, Ben Gurion, whatever the medical school formerly known as Sackler, Raphael Recanati International School, and I'm not seeing this one on the list, the most current list I have, but in the past, IDC was the best about getting this form. If you're going to IDC, ask them for the form. It's worth a try. I don't know why they're not on my list. It's disappointing, but they're usually really good. Any of those schools, they're not in the US, but they do have an employer ID. So you need Form 1099, ideally, and ideally you need the school's taxpayer ID or employer ID for US purposes. So when it comes to getting this credit, you either are paying the tuition for your dependent, or you're paying the tuition for yourself and you are supporting yourself. So if you are paying your own tuition, but your parent or somebody else is claiming you as a dependent, or you're paying tuition for, let's say, a grandchild who's independent, you can't claim it. You must be claiming this person on the tax return. The refund must match where the person is claimed. What used to be an exemption, but that we don't have exemptions anymore. So there's some more subtleties to a lot of the things I'm talking about. My goal today is really to give you an idea of if you are likely eligible and if it's worth looking into more details. Okay, so if you are paying tuition to any qualifying institution as an undergraduate student, even not as an undergraduate student, there are other credits, but specifically as an undergraduate student in your first 4 years, please try to ask your school for this Form 1098-T. Asking the school is really just the first step in trying to claim this credit. It is probably the first 2 or 3 people you talk to at the school might not know what it is, but it does exist, and I really am getting clients $1,000 back who are students and have no other income. If you are paying your own tuition and you're under the age of 24, it's a little more difficult because you need to prove you're supporting yourself. But if you're over that age, or you're paying tuition for your child who you're claiming on the tax return, do it. Get a professional accountant if you're having trouble, or anyway, because it's a good idea to do. So that's enough about the American Opportunity Credit. The final tax credit I'm going to talk about today is the most popular of all of them. It's the child tax credit. I often hear a lot of these credits mixed up. I see people online asking about the earned income child tax credit and things like that. You may not take the earned income credit if you live outside the US. You may take the child tax credit. Okay. In order to take the child tax credit, you must be earning to get the full credit, you must earn at least $11,830 to get the full credit for one child, and you must earn under $200,000 if you're single or filing separately, and $400,000 if you're filing jointly, married filing jointly. Okay, so somewhere between like about $12,000 and $200,000, you would be eligible for the full credit for at least one child. Under and over those points, it phases out. It's not all or nothing. So let's say you earn $3,000, you might be eligible for $15 or something like that. The credit through 2017 was worth up to $1,000. It doubled in 2018, but only $1,400 is actually refundable. That's what we're talking about today. The rest can be used to pay your taxes. So if you owe income taxes, which like most people in Israel don't, and I'm not talking about self-employed people, but if you actually owe income taxes, the other $600 can now go to pay for that. So what's happened since 2018 is that it might not be worthwhile for you to claim other credits like daycare costs and things like that, because if your taxes are still under $600 per child, it's just not worth doing some of the other stuff. So the actual refund that you can get back is $1,400 per child who is under the age of 17. So for 2019, that's a child who was born in 2003 or later and had a social security number by the due date of the tax return with extensions. Or if we're talking about a resident, had an ITIN by the due date. That is a really important requirement, and it's a relatively new requirement. It used to be you could file 3 years back, you could get your social security number today and file 3 years back or 4 years back. You can't do that anymore. If you have not gotten a social security number for a child who is eligible for a social security number, as soon as I stop talking, please make an appointment to do that. And then the next thing you want to do after that is find yourself an accountant who can file an extension for you, or file your own extension, Form 4868. You can get an extension to at least October 15th, and in many cases, you can get another 2 months after that. But don't wait. These things can take much longer than you would expect. If you applied at least 2 or 3 months ago and you haven't heard anything, please contact the Social Security Administration. Last year, they lost so many applications. It was just outrageous. So follow up. Don't wait till the last minute. As soon as you get the card, send a copy to your accountant before you lose it or something. It's really important. So you must have the Social Security number in time. You can actually file late. That's not the problem. So let's say you've never filed before, but you did apply, you did get a social security number for your child back in 2016. You can still file 3 years back and claim the refunds. Back to 2016, you can still claim refunds. Again, these must be children who are dependents of you. They must be dependents. You must support them at least 50%. There's some little nuances there. You can speak with your accountant about that. But generally speaking, they are your children or dependents living in your household. The main reason that people are not getting the child tax credit when they're supposed to be getting it or when they're eligible for it is because they are claiming Form 2555 earned income credit, foreign earned income exclusion. So if you are excluding your income using the foreign earned income exclusion Form 2555, you're not going to be eligible for the credit at all. And that's just a click of a button in a software to do that, and you lose out on that. And that's really, really common. So it's way too often I hear accountants in the US tell people they're not eligible to get a refund, and either they're simply misinformed or they're actually doing the tax return, but they click a little checkbox that says that this person has foreign income eligible for the exclusion, and it automatically takes the exclusion, which is an easy way to do things. So I want to get a little bit here into some foreign tax, so you have some understanding of how this works. If I already talked about your credit, feel free to tune out now. In general, there's two basic ways to, if you are living abroad and earning income abroad, there's two general ways that accountants will handle that so you don't owe income taxes. Number one way, a very simple way to do it, but not necessarily the best way, is to include Form 2555, and you can exclude up to about $104,000 a year. So if your income is under $100,000 or whatever it is for that specific year, you file this form, you don't pay any taxes on this earned income, and it's very simple. You give the IRS a bunch of information about where you lived and when you were abroad and things like that, and it just knocks out your taxes. So yes, it's simple, but it's immediately going to make you ineligible to actually get the child tax credit, the refundable child tax credit. So if you have children, probably you don't want to be doing that. And I also know a lot of people that use that because they think it's simpler, and they say, well, why should I bother hiring an accountant if I can just do this and I know it's fine and I won't have to pay any income? That's fine, but let's say an accountant might have charged you, I don't know, $300 to do your tax return, and you were eligible for several times that amount as a refund. I get maybe you don't want to talk to an accountant. I get you don't want to gather your information, but it's something to consider. An accountant hopefully is going to make sure your taxes are done right and that you get the maximum refund to which you are eligible. So the second way, as I said, the first way we knock out we keep you from owing taxes is using the 2555. That's the most common for people who don't have any children, especially if you're not paying super high taxes. The second way is what's called the foreign tax credit. That's on Form 1116 or 1116. The foreign tax credit is where you get credit for taxes that were paid to a foreign country. Generally, you had to actually owe those taxes to a foreign country. You had to be liable to the foreign country first to pay those taxes. You don't get to pick who you pay first. It's all based on laws and treaties. So, for example, if you live in Israel and you earn wages in Israel from an Israeli employer, your employer is probably withholding taxes from your wages every year. Doesn't mean you send a check to the Israeli taxing authorities. Your employer is withholding those wages, and you can get credit for that back to the IRS. You cannot get a refund for the amount you pay to Israel, but that credit actually carries forward up to 10 years. So that's why it's really worthwhile to be using a professional accountant who can track those things. And I'm not saying this to try to get clients. I have enough clients, thank God, right now. But it just is a shame when I see people who think they're saving by doing their own taxes, and really they could have saved so much more and gotten so much more back by just finding a professional accountant. So with foreign tax credits, you get credit for taxes you pay to Israel. And that's generally what we do if you want to get the child tax credit. So your child tax credit may depend heavily on how much tax you pay to your foreign country. If you aren't earning very much income, there's kind of a sweet spot where you earned enough money to get your full child tax credit, but not enough money to actually owe any taxes to the US, and you don't need any other credits. But once you get out of that sweet spot, you need to pay any taxes that you would have owed to the US. You need to have some sort of credit to pay that. So generally, the first credit we're looking at is taxes you already paid to your country of residence. Okay. So finally, when will you get your money back? Will you get your money back? So that leads into this. So the way the tax calculations work is first you have income taxes. Those are your regular tax, a percentage of your total income. So you're not going to get any refunds if your income is higher than any refunds you're eligible for. Okay. Once we bring your tax liability, your regular taxes down to zero, then we look at other taxes you owe. For example, what we call self-employment tax, which is Social Security and Medicare. It's about 15% if you're a self-employed person. And then these refunds we talked about may need to be eaten up by that tax. So a lot of people ask me, why is my neighbor getting a refund? My neighbor's getting a check for, they have 5 kids, they're getting $7,000 back, and I'm not getting anything. Well, the reason you might not be getting a refund is because you're self-employed. And so you have to pay Social Security to the US or self-employment taxes to the US. So yes, you are getting a refund, but instead of sending you a check, instead of the IRS sending you a check, and then also the Social Security sending you a letter saying, hey, you owe us money, the IRS just takes the money, sends it over to Social Security or Medicare, wherever it needs to go. Maybe you'll owe a little more money. Maybe you'll get a little bit of a refund back. So if you're not getting the maximum refund, it's not that you weren't eligible for it. It's not that you're not getting it, but it may be going somewhere else, not to you. It's possible also if you owe student loans, if you're in debt to the government can also withhold your money. They can also they can put a lien on your account and keep you from actually receiving your refunds. Another reason you might not actually see a refund, sorry, talking about the bad stuff first, really, really common situation for people who live abroad, especially for people who haven't filed before or who don't have any sort of US income, is that the IRS gets your tax return and they don't have a lot of information about you, and they send you a letter that basically says, hey, we received a tax return with your Social Security number and your name, and we suspect identity theft, and please contact us. And so read the letter, do what it says on the letter. If you want more information, on my Facebook page, I have a link. If you scroll down, I have a link to my colleague David Waxman of Expat Tax, who did a video explaining in more detail what you need to do if you get that letter, how to call the IRS. Basically, you call them, you answer all their questions. Hopefully they believe you. Sometimes you may fail the verification because they simply don't have enough information on you, about you in their system. And then you might have to send them more information. And unfortunately, it can drag out. So I would say for every single year I'm working, it gets worse. The amount of letters clients get before they get refunds, the amount of time it takes them to get the refunds, it's just getting worse every year. So please don't hire an accountant you can't afford, thinking you will be able to pay them from your refund. First of all, most accountants that I know are not taking their paycheck right out of your refund. There are some in the US who do it, but most of the ones I know are going to want to get paid possibly before you get your refund. For example, what I might do is in some cases, I might say like, the payment might be due a month or two after I file your taxes, but it can't be dependent on how much money you get back, or even if you ever get your refund. I hate to say it. So it's frustrating. And most cases you need to file a tax return whether or not you're getting a refund. But bottom line is, yes, there is potentially a lot of money you're eligible for, but don't hold your breath about exactly when you're going to get it. Ideally, if you have a US bank account, you can get a direct deposit directly into that account. That's only for taxes filed on time. So if you're filing your taxes, let's say you file your taxes in November and they're still processing it 3 or 4 months later, you're not going to get that. You're going to end up with a check. And that's going to be a US dollar check to whatever address is on the tax return. So number one, make sure it's an address where you can get mail, because if you don't get the check, you might get one of those letters, and it's really important. If you don't get the letter, it just makes a mess. So make sure you're using an address where you can get mail, and be ready to get, a US dollar check that you're going to have to deal with. So if you don't live in the US, it can be annoying, but it's, at least you're getting money. It is, citizen-based taxation, the fact that all US citizens have to file taxes, it's frustrating. Hopefully for at least part of your life, you might be eligible to get some refunds. I am not seeing any questions at all. I hope I am live. I have turned off all my phones and everything, so maybe someone's messaging me and saying I'm not. If you have any questions, leave them in the comments and I will answer later. Thanks so much for joining me.